Okay, welcome everyone. Today's webinar is, this is a re-recording of today's webinar actually, due to a mishap on my part, recording the wrong screen on the dual screen screen share. So I will do my best to make up what we covered today's, in today's webinar class. You just won't have the question and answer period at the end there to look forward to. So what we did was we started off when we looked at Euro USD. We looked at some setups that played out throughout the week. So let me start with doing that right now. You can see here, very beginning of the week, from the previous week, we had this peak low, right? And then it moved up from there all the way into Friday. And generally, what we have at the beginning of the session or beginning of the week, we have a false move, right? So this was our false move. Session beginning, week beginning. This move up was basically an inducement to continue the trend from the previous week and get people to kind of go long here. So you can see, although we're not going to fall for that because we have, we know the clues to look for, right? So we have 1, 2, 3 hits to the high. Okay, 3 pushes to the high there into the previous day's high, which is denoted by this blue tracer here. So you can see this trap through the previous day high with the 3 pushes. Okay, we have a nice looking divergence going on in the TDI. Okay, so if you take a look here, we draw a line. This line here, we can see the candles are pushing up, but on the TDI, it tells a different story, right? We got a nice downward momentum on the TDI. Okay, so we can take this. If you were able to catch this setup, this was a type 3 pattern setup. Okay, so you can see here that first leg in the Asian box. All right, closing below the 13, then back above. Our second leg, you can take basically right here on this shift candle below, which would also give you a TDI confirmation. Okay, down here, crossing below the signal line and definitely well below the market baseline. However, if you were concerned with the 50 EMA in the way here, you could have waited for the next candle right here and taken the entry right here. Okay, this would have given you a stop loss of around 20 pips right here, and if you took it all the way down to this EMA down at the bottom here, you give it a nice 35 pip trade. Okay, another setup that coincides here on this pattern here is the ID50 bounce. Okay, which we covered in last week's webinar. You can see here this would have been our M anchor, and then this is our 1350 cross. Okay, first pull back to the water up here, and then a shift candle down, closing below the 13, and also giving us our RSI signal close, crossing below the signal line as well. So this was our ID50 entry. Okay, a nice 22 pip stop. And if you rolled this down, you can see it held the 13 all the way down to the end of the session. You could have got out at 25 pips here, okay, before the end of the session, or if you, held out to here, you got a 20 pip trade and got out before the next day's session. Or if you kept holding on, you would have got much more, right? But generally, I don't like to hold my trades over into the next session, so would have got out there with 20 or 25 pips on that trade, right? And this trade here, the type 3 trade, would have given us 35 pips down to the end of this wick here, or if we held it to the end of the session, same deal, around 35, 40 pips. Okay, so overall, not a bad trade. All right, let's get rid of this here. Okay, so moving on to the next day, we have a nice looking M here that we see here, but coming out of the Asian box session, we have a 1, 2, 3 down, okay, motion. It gives us a little V spike, first leg. Okay, at this point, what I'm looking for is for them to come back down here and give me a second leg, but they did not do that. Right here, you're looking for it to roll down, give you a second leg, and come back up and close above the 13, and then take the trade up. But they didn't do that. They gave you a nice big V spike up, and then they just continued up all the way top here. Right. So right here, this was the new high of the day. Okay, and then they came down and created this first leg here, closed below the 13, even below the 50 and the 200 at this point. Okay, but then they came right back up to the top. To the same level, right to the high again. Okay, did not take it out. Give you a nice M structure here. Okay, second leg naval pattern, railroad tracks. You could have taken this entry right here, okay, although it would have been an aggressive entry, and you don't know if they would have came back up, but your stop loss would have been pretty tight right here, 12, 13 pip stop loss, okay, for potentially a 30-ish plus pip trade. Okay, if you didn't like this entry here, you could have waited for the close below the 13, our standard entry, and right there you could have seen the RSI and the TDI are crossing the signal line below the market baseline, so that was a valid entry right there. Okay, and that would have also netted you around 25-30 pips. Okay, so that was a nice M trade there. If you held, hoping for more pips down here, you probably would have had to kill the trade up around this point. And at that point, the trade would have been still around 18, 15-ish pips, right? Depending on your spread on the broker. So not bad, not a great trade, but still got some pips out of that. Okay, so moving on to the next day, we have out of the Asian box. Okay, we have a 1, 2, 3 push to the high of the day, all right, and then a big shift candle down at this point, right? So close below 13, all right, and we have our RSI confirming the trade on this candle right here, the next candle, also closing below the 50 EMA. If you didn't like the 50 EMA in the way of this trade, your stop loss would have been about 20 pips up to the top above the high, and you would have got potentially about 30 pips on this trade down to the end of the wick there. If you held and exited on the 13 EMA close, you made out with still a little bit of profit, maybe around 5 pips or so. Okay, and then it turned around, gave us this big V spike reversal after late into New York session. Okay, all the way up to the top here. Okay, and then this was our Mona Lisa trade for the week on Thursday, which gave us 1, 2, 3 hit to the top. Okay, you can see that here, 1, 2, 3. All right, and also once again divergence. As you can see, I've already drawn this out on this chart here, on this portion here. But you can see this downward divergence, and then you can see the candles are moving up, right? We have a upward slope here on the candles, but then we have a downward sloping divergence on the TDI. Okay, so it's important to look at the TDI. It can give you some big clues as to which direction the trades are going. Okay, so and you can also notice here that this on the H1, we have this peak here coinciding with this peak here to make a big multi-session M. Okay, so this second peak here, M, coincides with this peak here on the M15. Okay, so you can see here your Asian session first leg here with this railroad track formation. Okay, closing down below to confirm the first leg, coming back up and giving this railroad track formation out of the London session. Okay, you could have taken an aggressive entry here because at this point we have just barely crossing the signal line, but still below the market baseline. So this was a valid entry as a second leg. You can see you're also trapping activity again at the previous day's high, this blue tracer here. Okay, so trapping through here, right? And this was your entry on this shift candle right here. If you didn't like that the EMA was very close, you could have waited until the next candle closed down, and that still would have given you a very nice entry. 20 pip stop loss with a potential of 85 pips on this trade. Okay, very, very nice trade. We happened to get wicked out right here on the news because we had set our stop loss to break even down here, and we ended up getting wicked out. But had we kept our stop loss at the top, we would not have been taken out, and we would have made all of these pips. Okay, so that was our big trade on Thursday on EU. Okay, and then going into Friday, generally what we're expecting after a big drop like this is we're expecting the safety trade, right? The straightaway trade after the big drop. So they kind of did that here, almost, but not really, right? They gave us this little M structure here. This was a little poke out of the Asian range, okay, and then a quick turnaround shift below the 13 EMA. We didn't get a candle close. We didn't get the RSI crossing the signal line and also below the market baseline. So that happened on the next candle here, right here. Okay. So this was your entry. Although it didn't give you very many pips, okay, 18 pip trade for about a 20 pip stop loss, so not quite 1-to-1. If you were holding trade on trailing the 13 EMA, you closed out here with about 9 pips. Okay, so overall not a great trade, but what it did was it turned around and gave you a W right here. Okay, so this was your W entry here if you wanted to take this. Nice tight stop, 14-15 pip stop, and about a 30 pip trade to the top of the wick here. Okay, so not bad for a 2-to-1 trade, and you turn that around, and then they just kind of went into consolidation into the new week. Okay, so what we did was we reviewed some of the ID50s that happened. So one of those was on GU. Okay, so let's take a look at GU. ID50, and that was right here. Okay, so take a look at this Asian session here, giving us our ugly looking W. Okay, from this session here, this pin down into the Asian session into this multi-session W anchor. Okay, 1350 cross right up here. Okay, first pull back to the water, giving you a nice morning star formation. Okay, the candle here didn't quite close above the 13, so the next candle up did that, and we also just barely got our RSI confirmation, just barely right on the line, really crossing the signal line. Okay, so this was your entry here. Our stop loss goes right below the shift and even below the EMA if you want to be safer, and that gives us a nice tight stop loss, about 14-15 pips for potentially a 35 pip trade. Okay, and if you held even longer, here it kind of jumbled around the 13, so you might have gotten out here if you were holding it with a 10 pip trade there, but then it continued to bounce and rattle up into the next session, into the next day, and potentially you could have got a lot more out of that if you held. Okay, that was on GU. Next, let's look at Euro JPY. Okay, now this one has been in a downtrend since last week, right? Since the peak formation last week, we had a drop, right? It continued to drop from last week, and we had a couple of different spots here where this ID50, we were looking for a reversal back up, right? Because it was an extended level 3 condition on EJ, and we were looking for a reversal back up. A lot of people thought that this might have been it. Okay, so we had a W anchor here, 1350 cross with a big bullish candle, right? Pull back to the water, first touch of the water, and then shooting up right here. This was almost an ID50 entry going long. Only problem was that you didn't have the RSI crossing above the signal line. Well, it was just right on the line. So you might have taken this, you might not have, depending on what your TDI looked like at the time. But if you did take that trade immediately after you got a railroad track candle down, closing below the 13, you could have waited for the next candle to see, but at this point you probably have to kill the trade. Okay, so you take a small loss, 7 pip loss, 8 pip loss, right, depending on your spread. But then what did it do right afterwards? It gave you an ID50 the other way. Okay, so you look at here, we have our M anchor, we got a 1350 cross. Okay, first pull back to the water right here, a nice spike pin to the Mayo, and then a big shift candle railroad track down, closing below the 13, and also giving you your RSI signal line cross, depending on your broker. But if not, then definitely this candle right here, and that would have been your entry. Okay, so 3 to 5 pips above the shift candle, above the EMA, you're looking at about a 22 pip stop loss. Okay, and if you took it all the way down to this pin here, you got a 30 pip trade. if you're trailing the 13, you can see that it held all the way down to the end into the next session for about 55-ish pips. Okay, so a good trade if you were able to hold on to that. But if not, you still made 30-ish pips. Okay, so pretty good overall. All right, one more ID50 setup was on GJ. Okay, so let's look at GJ, and this is really similar to the EJ setup. Okay, because we also had a W anchor here, ID50, that did not play out. Right, so this bounced to the water again with the railroad tracks and above, close above the 13. This did not give you your RSI cross above, so that was not a valid trade. But then it came, right back around and gave you ID50 the other way, right? The same ugly anchor that we saw on EJ also appeared here. Okay, 1350 cross. First pull back to the water, 30 pip pull back to the water, and then right here is where it closed below the 13. You give you a shift candle, close below the 13, and you can see the RSI also is crossing the signal line down. Okay, so this was your ID50 entry. It gave you 4 pips and it reversed on you. Okay, so in this case, right here, this is probably where you kill the trade. You take an 8 pip loss. Okay, this big bullish candle. If you didn't take the loss there, this big bullish candle here definitely took you out. Okay, and you would have that would have been a 16 pip loss there. Okay, but if you got out at either of those sections there and you saw this candle come down and form this railroad track with a big shift down close below the 13, now you're interested in the trade again. Okay, this is the setup that I did not call or did not go over in the previous webinar, but when an ID50 gives you a second leg like this, okay, that's called an ID safety. All right, so an ID safety is an ID50 with a second leg. Okay, now this railroad track formation, candle close below the 13. The only other condition for an ID safety is that we're taking standard M or W rules, so the RSI not only has to cross the signal line, but it also has to cross the market baseline as well. Okay, so in this case we need it to be below the market baseline, which is this yellow line right here. Okay, so on this candle right here we get neither. Okay, we don't get a cross below the signal line, we don't get a cross below the market baseline, so I'm not taking my entry on this candle here. All right, this candle we don't get it, this candle closed above, right, this candle closed below. Okay, but we got our RSI crossing the signal line, but we're still not below the market baseline, so that's not yet a valid entry. Okay, this shift candle closed down below. Okay, now we're right on the line here. All right, depending on the market conditions and what your TI looked like live, you might have taken the trade here. Okay, but definitely down here on this candle, you have your signal, valid signal to entry. Okay, so this candle would have been your entry. Your stop loss would have been 3 to 5 pips above the shift or above the EMA. Okay, about 23 pips or so. If you were able to hold the trade, you were able to pick up some nice pips on this right here. So from here, let's see, you would have gotten about 40-50 pips, okay, holding into the Asian session. If you were just holding to the end of the session, not too great, 15 pips or so. I generally don't like to hold the trade into the next session, so I probably would have gotten out at that point and just took the 15, but if you were able to hold it, you got a nice 40-50 pip trade there. Okay, so that was one of the things that we didn't cover on the webinar that I wanted to clarify today. So the ID safety, which is the second leg of the ID50. Okay, all right, so now what I want to do is I want to go through and give you guys the new setup. Okay, so what we're learning today is something called the M&W off the Mayo. Okay, so let me just start this presentation for you and I'm going to get right into it. Okay, so from Steve's course we know that he gives the EMAs color codes and names. Okay, so like the 13 EMA is red, so he calls it the ketchup. The 50 EMA is kind of like an aqua color, so he calls it the water. The 200 EMA is white, so he calls it the mayo, short for mayonnaise. And then the 800 EMA is like a dark blue color, so he calls it the blueberry. Okay, so anytime I refer to the EMAs in these code names, you're going to know what I'm talking about. Okay, so M&W off the Mayo or the 200 EMA. Okay, all right, so what is the M&W off the Mayo? Okay, market makers are creating a reversal pattern off of the 200 EMA on the 15-minute chart. Okay, on the 1-hour chart, market makers are bouncing off the 50 EMA after the stop hunt. Okay, coincidentally, this setup here, you guys should know this already, okay, is the 1-hour 50-50 bounce. Okay, so on the 1-hour chart, 1-hour 50-50 bounce, if you go over to the M15 chart, okay, you're going to find the M&W off the Mayo. Okay, so we're going to look at some examples of that soon. This can happen in any of the 3 levels, okay, but mainly you're looking for a setup in level 2. Okay, if you are in level 3, you would be trading back into the first leg. Okay, we can trade both directions in level 3, so that's okay. All right, but if you have a multi-day anchor or structure, it's not advised to trade back into the first leg. Okay, now if that sentence there confused you, don't worry, I have some examples and I'll show you exactly what I mean by that. Okay, so same entry rules apply for our standard M&W reversal patterns, okay, which means that we're still looking for the second leg to close below the 13 EMA, and we're looking for our TDI confirmation, meaning the RSI crossing the signal line and above or below the market baseline. Okay, so standard M&W rules. So let's look at some examples. This one here is what we would call a classic example of the M&W off the Mayo. In this case, it's an M. Okay, so I put these charts side by side so that you guys can see the contrast between the H1 chart and the M15. And I know it looks a little small, so on the next, don't worry, I have zoomed in views of these setups as well, so you guys can see clear. Okay, so but take a look here. We have our level 3 peak formation. Okay, at the top here. Which coincides right here with this peak formation, okay, on the M15. All right, and then we have your 1350 cross on the H1, okay, which is the same as your 5200 cross on the M15, okay. Now we have the pullback to the water on this bounce, okay, and then a shift candle down, close below 13. We don't get our RSI signal line cross though until the next candle here, okay, so you can see that is your H1 bounce entry. But if you're zooming in on this section here on the H1, you're going to see that you're going to have an M, okay, on the M15. Okay, so let's take a closer look at this setup. All right, so we have a 5200 cross here, okay, right at this spot. Okay, we got our first leg, okay, M. All right, so we have our close above, then close below, confirms our first leg M. Then it comes back up across the 13 again. Right here could be our second leg M, but there's a reason why it's not. Okay, so we have our shift candle close below the 13 EMA, all right, but you can see that the TDI does not confirm the second leg, right? We have a cross below the signal line, but it's not below the market baseline, so this cannot be our second leg, right? Our second leg comes right here after this nice evening star formation. Okay, so second tap to the Mayo right here, pin to the Mayo, pin to the Mayo, and this technically could be our entry, okay, because it is a nameable pattern leg, right? But we don't have we don't have the cross below the signal line and also below the market baseline, okay? So our entry is actually on this candle right here. This big shift down below the 13 gives us our signal line cross below the market baseline and below right here to meet our entry condition, okay? So that is the TDI confirmation right there. Your entry candle is right here on the close of this candle. And if you were able to catch that trade, you can see it held the 13 EMA all the way down here to the end, and you would have got a 30 pip trade on this pair. This is USD JPY. Okay, so given on a pair like this with an ADR of, I think it's around 60 right now, especially in the summer months when there's less volatility, catching a 30 pip move, on UJ is great. Okay, this is a continuation move, so this is kind of half the move. So you caught pretty much all of this, right? 30 pips. If you were to catch the top, up here, then you can catch, more of the move. But, being able to catch 30 is great. If you were holding it, hoping for more, you got taken out, either on this candle or this candle, depending on if it closed above here on your broker, but certainly after this candle, okay, if your entry was here, you kind of broke even, right? Okay, so set your pip targets, 25, 30 pips, pretty good on a pair like UJ, okay? All right, next, EU, right? Now, what I said earlier, the H1 50-50 bounce, okay, is going to give you the M off the Mayo on the M15. Okay, so let's take a look here. We have our peak formation, okay, and then our 1350 cross. Okay, first pull back to the water on the H1, which gives you a nice railroad track formation, close below the 13. But we did not get our size signal line cross until the next candle here, shift. Okay, and if you got it, you can take this entry here, or you could have waited for the pullback and took the pullback entry and rode this nicely down. Okay, so now let's zoom in on this section here, and you can see that we actually get, okay, so here our 1350 cross coincides with this 5200 cross on the M15, right? So this is your M off the Mayo right here, okay, and you take the entry here all the way down. All right, so let's take a closer look at that, and we can see here our 5200 cross, okay, right here. Our first hit to the Mayo, this one pin to the Mayo here, right, and then it comes back down to create this first leg. All right, then it goes back up the 13, okay, and then it kind of rattles around here, and then finally giving you a shift down below all the EMAs on this candle. Okay, now you can see that all the areas that it's trapping. Okay, it's trapping the EMAs, it's trapping this current week open price that we have here, and also just barely reaching the previous week high, but not actually getting there. Right, so these areas here were already dealt with, and then this area here, they didn't want to go above here because they didn't want to release those orders. Okay, so this is a big clue right here, just a tiny poke above the Asian range, trapping through all of these confluence areas. Okay, shift below the 13, and this is not our entry yet though, right, because we don't have our TDI confirmation. So our TDI confirmation comes on this candle right here. And that's what we get, the cross below the signal line, below the market baseline. Okay, so that is your TDI confirmation. Right here is your entry candle, and you can see that this trade also held the 13 EMA all the way down to the bottom here for a nice 100 pip trade. Okay, so very nice trade if you were to hold that. And right here, if you able to, if you got out on the 13 EMA exit, this would still have netted you a nice 85 pips to end the session, and you could have closed out right there. Okay. All right, next, USD CHF. Now this right here is an example of trading back to the first leg in a multi-day structure. Okay, so I told you guys I would come back to this and explain to you exactly what that meant. Okay, so take a look at how this spike down and then come back up here made this big outside structure. Okay, so you can see that more clearly on the M15, this big V spike here structure. Now this outside structure encompasses everything in here, okay, which is what makes this an outside structure. All right, and you can see that this is the first leg of this big multi-session W here. Okay. Now what we mean by, it's not advisable to trade back into the first leg if you have a multi-day structure, right? So this is a multi-day structure. We got the first leg here, W, second leg here of the W here. Okay, you can trade back into this first leg so long as you're still within that multi-day structure, not after the second leg. Okay, so here, this pullback to the water on the H1 is the M that coincides on the M15. Okay, and you can see that we're still within the first leg of the big multi-day structure, so it's okay to trade this going back into the leg. Okay, if that makes sense. You can't see the chart over here on the M15, but over here on the H1, on this second leg, this railroad track formation on the water would be what forms, some kind of M on the M15 over here on the Mayo. Okay, so what we don't want to be doing is trading this M off the Mayo, because look at the pips that you got on this trade versus the pips you got on this trade all the way down here, right? Because you don't want to be trading back into the peak after the second leg multi-day structure. This wants to continue to go up now. Okay, all right, so let's take a little bit closer look at this one. So we have our 5200 cross. Okay, first leg of the M here, close back above, close below, back above to make the second leg, right? And then we get our close below the 13 here, but no confirmation on the TDI yet. And then this big shift candle, okay, there's the cross. This big shift candle here is where you get your TDI confirmation, okay, and that's your entry right there. Okay, and then if you were to take the trade all the way down here to this previous week low, you would have got 40 pips. Okay, if you set your target anywhere below that, 20, 25, 30 pips, it would still have been a good trade, because this is USD CHF. Very low ADR pair. Right now, so I think it's around 50 something. Okay, so a 40 pip trade on UF is basically the whole move, right? So you can be happy with that trade. Don't try to be a hero and hold this and try to get 100 pips, because it's very likely that you're not going to. Okay, not to say it's impossible, because look, you would have got it here or something like that, but on a pair with an ADR of 50, catching 40 pips is great. Okay, so take your pips and call it a day, and then we can move on to the next one. All right. Sometimes what you'll get on an MW off the Mayo is a continuation trade afterwards, such as the ID50. Okay, so MW off the Mayo leads into an ID50 bounce. So a lot of times you'll see this. Look, right here is you have your W off the Mayo. Okay, then you have your 1350 cross, and then first pull back to the water, and then the ID50 here. Okay. I went through that a little bit faster, but we'll look at the zoom in view on the chart, and then you'll see that a little bit clearer. All right, so right here we can see the 5200 cross. Okay, over here, then our first leg W, closing below, closing above. Okay, second leg is fast. Okay, we have a railroad track second leg. All right, down and up. You like to see that big fast move down and up. Whenever it creates legs of M's and W's. Okay, so that right there would be your TDI confirmation on this candle right here, closing back down below and above, closing above the 13 and above the 50 also, which is good, right? We don't want to be against the EMA on the candle close. Okay, so you have all your confirmations there. You took that trade. That was your entry. Took it up to the top for 45 pips. Okay, and if you held and closed at the exit of the 13 EMA, you still would have made about 30 pips right there. Okay, and that's a nice trade to end the session. And then we'll go into the next session. If you managed to hold all the way to the top, though, you would have got 120 pips into the next day, right? Okay, oops, sorry, didn't want to skip over that just yet. Okay, so what I wanted to show you is right after that, KW right here off the Mayo, you see we have a 1350 cross here, okay, and then our first pull back to the water, okay, and we have what looks like a W here, but it's not a confirmed W, because we did not get a close of the 13 EMA on the first leg. Okay, so this structure really is still only the first leg. Okay, and we get a close right here above the 13 EMA. We get our RSI signal line crossing above, which confirms the ID50 entry. Okay, remember that the ID50 entry does not need to close above the market baseline. It just needs to cross the signal line. Okay, so there's our entry there, and if you were to take this to the top there, it would have been a nice 50-60 pip trade, and possibly even more, because actually each of these is 25. Okay, so 50 pips plus the entry here is probably around 70-ish pips. Okay, so there's a nice ID 50 bounce trade on that. Okay, right after the W off the Mayo. Okay. All right, next, EA. Okay, sometimes what you get is you only have one leg that touches for the Mayo. Okay, so in this case, you can see here, this is the first leg, it didn't touch. Okay, but then the second leg does. Okay, and generally what you want to have happen is when you have only one leg touching, you want at least 2 pins touching the second leg or the first leg. Say if it's the first leg, you want 2 pins touching the first leg and the second leg doesn't touch, right? Or vice versa, as we have in this case. Okay, so here we have, our 1350 cross on the 1 hour, which coincides with this 5200 cross on the M15. Okay, and then this is our first leg W, closing above, close back below. All right, this is not our second leg W. Why? Because we don't have the TDI confirmation for this. Okay, so this is our first leg, this is our second leg, and then let's take a look at the zoom in view so you guys can see this better. All right, so 5200 cross here. Okay, right here is the second leg where it gives you the TDI cross. Okay, now this is our first leg, like I said. Second leg comes down here. The first time the candle crosses the 13 is right about here, right? So if you're looking for right here as your second leg, you can't take this entry yet because we don't have a close above the market baseline. Okay, it's not until you get to about right here. Okay, right here on this candle, but this candle you have the 50 EMA right in front of you. Okay, so I like to just wait until it closes above the 50 EMA, and then you can take this entry here right on this candle. Okay, so you get your TI confirmation on this. You got your entry close above the EMAs right here, and if you took that to the top, you would have gotten a nice 50 pip trade. Okay, all right, so that's an example of just one leg touching. Okay, this one kind of hovered over. All right, now multiple M and W's off the Mayo. Okay, sometimes this happens, especially with trades that with pairs that like to trend and go on long trends, right? CAD pairs do this, right? Gold does this. Sometimes the Aussie crosses does this. Okay, so what happens is you'll get an M or a W off the Mayo, okay, and then sometime later you'll get it again. Okay, on this particular example, EuroCAD, you can go back and do some back testing on the charts, but you'll see that this actually, I think it gave around 3 or 4 different W's off the Mayo, and it just kept going up and up and up. Okay, so same thing here. We have a 1350 cross. Okay, coincides with the 5200. First pull back to the water, you get an H150 bounce. Right, entries here and here. All right, and that's coinciding with these W's off the Mayos on the M15 here and this big one here. Okay, so let's take a look at that. We have 5200 cross over here. Okay, this is our first leg W, closing above the 13, then closing back below to create the second leg. Okay, right here is where it closes above the 13 and also above the 50. Okay, so this candle is what you're looking for. Your entry on this W. All right, you got your TDI confirmation as well. Okay, market baseline above the market baseline, crossing above the signal line. All right, so your entry candle is right there. Okay, and if you took this trade, you can see it came down and gave you a little scare, right? But your stop loss should be right below the shift, right? So the below here, it didn't come close and it bounced up, and you would have got about 80 pips on this trade. Okay, if you held it to the top here of these two levels. Okay, so you have the 50 level here, then you have your previous week high marker here. That's a good place to take profit. Okay, if you didn't and you held, okay, the 13, if you didn't close out there, you definitely closed out here, right? So 80 pips potentially, or you could have gotten, I think, around like 60 here, or maybe like 40 here, something like that. Okay, so then we go into the next, W. Okay, so immediately the next day it gives you this big spike down here. Okay, the first leg of this W, close back above and below to make the second leg. And right here is your second entry, right? This candle closes above the 13, above the 50, gives you your TDI confirmation as well, okay? Right there, we're closing above, crossing the signal line and closing above the market baseline. And this candle right here would be your entry, okay? And if you took that pip trade all the way to the top, you would have made 60 pips right there, all right? So not a bad trade 140 pips total on these two setups here. And like I said, if you go back to your own charts and see, this continues, up and gives you another W and then another W, and it just goes on forever. Pretty nice when you can catch those. Okay, all right. So that's pretty much it for the lesson. Okay, and I do have homework for you guys. For those of you watching the recording, it'll be the same as the ID50 homework that we did last week. The same criteria. Just send me 5 charts, okay, with examples of the M and W off the Mayo, okay. It can be any pair you want. Just look for 5 good examples. Complete markups on the charts, just like I have them marked up with the entry rules. What you're looking for, just so I know that that you understand the setup and the material. Okay, send those to my email, jeffxtrader@gmail.com. Okay, and then I will grade those for you and give you feedback. Okay, all right, so that's going to do it for today's lesson, guys. See you for the next class.